Well, hi there. So, over the last couple of weeks as I've been recording these videos, you've seen a little evolution of my covered call strategy here. And today, my mindset is starting to gel on a more complete strategy. I am currently been waiting for this Digital Ally DGLY covered call. I have the Jun19 calls, which means it expires tomorrow. I sold them for 78 cents. And for the longest time, it was actually trading 80 cents and 90 cents. So it was trading above the price that I sold at. Even though the stock was up and I may have made a profit, it still didn't go the way that I had envisioned. Now, if we look at the stock, it was very interesting this week. So today is Thursday. On Monday, there was some trouble in Atlanta over the last weekend. Another unfortunate incident with somebody being shot, and so this stock kind of reacted to that Monday morning, moving from $4.25 up to $5. And for most of Monday and most of Tuesday, it stayed around that $5. In my video from Tuesday, I mentioned how interesting it was that the stock sort of pegged to the strike price of my options. And in a way, I thought there might be a little conspiracy where, and I think it probably is a bit true, where there's somebody on the short side and somebody on the long side. And so there's a little tug of war. We might be seeing there's some really high volume on Monday and Tuesday, some green, some red, that was making the stock, like I said, like a tug of war, being stuck at the $5 mark. Then yesterday on Wednesday, around 11 a.m., the some of that air, I think the president signed an executive order about the police, and right away the stock dropped 50 cents. And look how pegged it is to the 450 mark. So I don't know if the tug of war is going on here. The volume certainly really dropped out of the market yesterday midday. And then again, it capitulated from $4.50 down to $4. So in the course of 4 or 5 hours, it moved from $5 to $4 and sort of has settled around that $4 mark. So today there was a dip and then back up. It ended at 402. So very interesting to me how the stock, at least this week, has been playing near these 50-cent intervals, the $4, $4.50, and $5 intervals. Now, with the option had very high price. This is above where I sold it. But then yesterday it dropped, and then today it dropped even more. So I have two open covered calls plays. The first one I mentioned in the video yesterday was I bought it at $4.39, sold the June calls for 78 cents, which lowered my cost basis. And today I was able to, before it fell to 10 cents, buy back the call and turn around and sell the August call. So I skipped a month, collected $1.65. That brought my cost basis down even more. Now, this call has even dropped 20 cents, 25 cents more from the time that I sold it. So I'm profitable even on the call. My target for this call, now I'm setting this at 50% of my price. So I sold it at $1.65. I'd like to buy it back for around 80 cents. And I wanted to make a note for myself that this is an August call. So our earnings are August 12th. So I got to be out of this call well before then. Now, I did skip a month. I didn't go from June to July. I went from June to August. There's two reasons for that. First is I already have sold some July calls. So if I go to this trade, I made this trade, I guess a few days ago, where I bought some DGLY, and instead of sending the Junes, I sold the Julys. I got a much higher premium for that. That brought my cost basis down into the 290 range. Now for this option has dropped from $1.55 to 95 cents. So again, 33% profit on only a few days on the call. And my target is 75 cents. So I already own the July, so I rolled into August. So I think that's what's going to be my strategy. I'm going to I'm going to basically sell a call, but I'll give myself a lot of time, get some more juicier premiums, and then that's going to have less less volatility and less stress or whatever. So I'm going to look to roll this to the September timeframe sometime in the next 2 weeks. So once the Junes expire tomorrow, this will be the next target, and then I can roll this to September. Now, this is the tweak to my strategy. So the other day I said I'm taking the 50% profit, and you can see that. I think I'm going to start to look for calls that still have 45 to 60 days to expiry. Instead of trying to look for calls that are like 5 days, 10 days, 15 days away from expiry, I step back a little bit, I collect a bit more premium, and my risk is a lot lower. And then I can buy back those calls with 10 days to go. Yes, I'm not going to get the 5 cents, 10 cents, 20 cents premium to buy it back, but I still make my 50% profit target. I make 50% every 2 months on that trade. That's pretty good. And if you look at it from a cost basis point of view, pretty soon with DGLY, I'll be working only with profits. My cost basis will be 0 or below 0. So that's the tweak to my strategy: 50% profit, looking at 60-day calls, and I'm already rolled my June DGLYs, and I'm going to roll July within the next couple of weeks. I hope you're doing well. Please hit the like, hit the subscribe, leave a comment if there's something you want to talk about. DGLY, Remark Holdings, whatever it is that's on your mind, I want to hear from you. Thanks a lot, guys. Have a great day.